This is Madrid, the capital of Spain. In the center of the European country and home to a vibrant art scene, an impressive financial hub, and an ever-growing population, Madrid has become a symbol of Spain's economic comeback. And it isn't alone. Across the country, cities are writing their own success stories.
Spain has very much been the outperformer in Europe, and they've really boomed after the pandemic. They're growing at more than 3% last year and looks like it's set to continue for the next couple of years.
Spain's 3.2% GDP growth in 2024 stands out against its neighbors, especially when you compare it to the European Union's other big economies like Germany, France, and Italy. And growth is expected to remain high in 2025 and 2026.
It was last year in 2024 where a large investment was made here in Madrid, and we formally inaugurated the European headquarters here. We now have around 55 people on the team. That is very strategic, so things are happening here.
But while the numbers look good, not everyone is feeling the benefits of a booming economy.
The paradoxical thing that we see in Spain is that despite this growth, people are actually not very happy, and we see very fragmented politics.
So, what's driving Spain's economic growth? And can it last?
¿Dónde estaríamos sin la aportación de los trabajadores migrantes a estos sectores tan importantes para nuestra economía?
Immigration has really been one of the pillars for growth for Spain. Some countries have closed their borders to immigration. Spain, on the contrary, opened their borders, and they filled thousands of jobs thanks to that.
90% of the increase in the labor force since 2021 comes from immigration. This is allowing the service sector to expand. This is keeping firms relatively competitive in terms of containing the increase in labor costs.
A lot of them come from Latin America, so they already speak Spanish. Some even have a double passport already.
The Latin American economy, some of them are not doing relatively well, so there is this push factor. Immigration to the United States has become more difficult, and therefore people are turning around and seeing alternatives.
Immigration to Spain spiked in 2022. Nearly 1.3 million people moved to Spain that year, with the highest number of immigrants coming from Colombia, Venezuela, and Morocco. And the country isn't stopping there. Migration is projected to stay high for decades to come. The country's work visa schemes, along with the granting of residence permits to undocumented workers, are big drivers of these figures, with Spain planning to welcome 1 million migrants over the next 3 years under these categories alone.
The people that are coming have higher education. The very important characteristics of immigrants: when they come, they take risks, they open businesses.
These workers are expected to fill jobs in some of the country's most active industries, like the booming tourism sector.
Tourism has also been a key pillar for growth. It has been the case for many decades, but over the past few years after the pandemic, there's been a boom in traveling, and Spain has really benefited from this. It's one of the most visited countries in the world already after France, and now tourism makes almost 14% of the GDP of the country.
People are redirecting resources. Instead of purchasing cars or purchasing clothes, they are traveling and having a good time.
With visitors spending an average of €160 a day and staying between 4 and 7 nights, tourism also gives a boost to local businesses like shops and restaurants. This in turn creates more jobs. Employment in the tourism sector jumped nearly 10% between 2023 and 2024, bringing the tourism workforce to roughly 3 million people.
Most of the increase in tourist inflows is actually in what we call shoulder months, just before or after the summer break. So there's a bit of deconcentration in how these flows are coming to Spain, also geographically. More tourism related to, of course, business tourism, but also rural tourism, also in the north part of Spain.
And while tourists keep Spain's stills ringing, COVID proved the country can't pin its future on the sector alone. When borders slammed shut in 2020, that dependence backfired. Spain suffered the Eurozone's steepest contraction as visitors to the country and their cash vanished. As a result, Spain became the second biggest beneficiary of the European Union's Next Generation EU funds, money designed to support recovery from the crisis through grants and loans. A total of 163 billion euros was made available to Spain, contributing an additional 1.2 to 1.7% to GDP growth in 2024.
Spain, you have to bear in mind also, were hit really hard during the financial crisis, and they had to go through very severe austerity, and for many years the very fabric of the economy was damaged because of that. And so with the pandemic, like everywhere in the world, it hit the economy. But those next-gen funds really help them boost the growth as well, and they really diversified.
70% of the grants will have been dispersed by now, 55 billion euros. We're still pushing ahead to be able to make good use of these almost 80 billion in grants, first to get out of COVID without scars, and then at the same time to modernize our economy, to increase our productivity.
This was a program that was designed in part to try to help with the recovery after the pandemic. So the government prioritized investment projects that they already had a plan for, and therefore they are having a relatively low multiplying effect within the economy.
While tourism is really important for the Spanish economy, they're also trying to develop some other sectors and bring in some foreign investments as well.
One area seeing rapid growth is non-tourism service exports, especially high-value-added sectors like information and communications technology or ICT, banking, professional services, and green energy. The sector's revenues reached 100 billion euros in 2024, outpacing tourism's 90 billion euros. And foreign companies, including several from China, want in.
Spain is probably the location in Europe where the most PV has been done. People use trackers because it increases light collection and hence energy generation. So Arctech is one of the leading tracker companies worldwide. The company was founded in China originally, and then China had this PV boom. We own our own manufacturing facilities, so we can iterate according to market trends.
Many foreign companies are eager to take advantage of Spain's low-cost energy. In late 2024, auto giant Stellantis teamed up with battery manufacturer CATL, announcing plans to build a $4.3 billion lithium iron phosphate battery plant in Zaragoza. Foreign direct investment was strong too, with Spain ranking as the fourth most attractive country in the EU for investors. And China alone declared it will be investing up to 11 billion euros in Spain in 2025, as it gears up for a record 33 new projects in the country.
When you look at where does that investment come from, the largest investor in Spain is the US. But we're also attracting investment from other parts of the world, including China, on specific sectors related to renewables, to sustainable mobility as well. And this is, of course, always part of our economic security agenda.
The solar ecosystem is really here, from the junior engineer all the way to the funds that are investing in these large assets. There are certain tax agreements in place that other countries within Europe not possess with China, so that made life easier to incorporate subsidiaries in Spain.
But not everything has been smooth sailing. One big challenge has been keeping pay at pace with the rising cost of living. While the government did raise minimum wage by 4.4% in 2025, real wages the year before only grew 1.9% when adjusted for inflation.
When you take a look at real wages, what you have seen is a real roller coaster kind of trend in which people have lost a lot of purchasing power with the increase in inflation, and wages have barely recovered the level of 2019. Pensions have been increased by more than inflation, and that has led to relatively increases in Social Security contributions by people that are currently working. That also may explain why some people feel that this recovery hasn't been that strong.
And while tourism and immigration are strengthening the overall economy, they're also placing pressure on an already stretched housing market.
The question of the housing crisis, we know, is still a key one. They have a lot of young people that actually stay with their parents for a really long time. That has an impact on overall the economy, that has an impact on the fertility rate in the country.
What is going to happen with tariffs and international trade, especially in an economy like Spain, where exports of goods have increased considerably over the last 15 years. The second challenge, savings rates remain relatively high. A third source is this low investment rates. We need to invest in trying to replace, for example, the automobile sector as an engine of growth. And finally, how to decrease the government deficit and public debt.
That economic growth is not going to be sustainable for Spain. There are some endemic issues that the country will have to deal with. One, of course, they're facing climate change, but you have issues like youth unemployment. Spain still has the highest rate of youth unemployment in Europe, and they have a heavily fragmented political scene as well. So this will have an impact on the economy going forward.